All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and today is the long-awaited, Alibaba earnings video. People have been asking for this one for a few days. It was quite an interesting reaction to it on the open stock market. So now we're going to finally give our little take on it.
Yeah, if you like this kind of entertaining stock market content, we're just two stupid guys trying to figure everything out. Give us a like and subscribe.
So that means we'll get to it.
Two stupid guys trade stocks.
Hey, what do you think of the background of this picture, Dylan?
It looks like my portfolio.
Yeah, it's a little zombie scene, actually. You see the blood down here on the ground.
Yeah, not bad.
Yeah.
Also, to anyone watching, I got to apologize if there's an echo. I am moving. That's why there's nothing behind me. And I left my computer here, and there's nothing else in this house. So
sounds about right.
Can't find my shirt or my razor. So
Perfect. That explains a lot.
Yeah.
So pretty wild reaction here. This is the weekly chart. Nice big red candlestick here. What do you think of that, Dylan?
Looks like my portfolio.
Yeah.
I gotta say, I'm still waiting for. This is the only time where I'm like, I'm okay if it goes down, because I wanted to accumulate 30 more shares at 128 is my goal.
Okay, that's pretty. Not entirely out of the realm of possibilities. I was just watching a technical analysis guy that was saying that 138 he thinks is where Alibaba is going to retest a level. It's a key level.
Yeah, so that would be their double bottom. But in the grand scheme of things, they have massive support below that. So, I'm down for both. I'll buy 10 at 138.
Okay. Yeah, we'll see. They're not too far from it at this point. So this is from their earning presentation. Depending on the company, right? It's all in context of what you expect from them. If I told you they grew 29% year over year, what would you think of like that bloodbath of a reaction from the earnings report?
Those numbers sound great, but one, there's been a big trend like Facebook. Everyone reporting earnings is getting slaughtered. There's not many companies that are reporting earnings that are then going up after.
Okay.
Like over 50% of the stocks are below the 50 or 200 moving average. Okay. It's just like big stocks that are pumping them up.
Yeah, people have talked about that, the silent crash, if you will, where the vast majority of equities are trading down, whereas like the certain tech mega caps have been propping up the market. Yeah, that's a good question. Not something that's pertinent per se to like what I'm trying to like get at with Alibaba here, but 29% year over year growth. All right,
that's great. That's fantastic.
Yeah. They went through a few different segments here. You're talking about 30% of China core commerce, growing internationally, moving into like Southeast Asia, particularly is a big area of growth for them. And
I think I misunderstood your question. 30% growth with a company that is producing as much as they are is disgusting. If that's what you're going for.
Agree. Yeah, exactly.
Pretty crazy.
And their cloud computing segment grew at 33%. Any idea, like, people say that Alibaba is the Amazon of China. Any idea what Amazon is growing at comparably?
Not that much. I don't think so.
Well, here's a little answer for their most recent quarterly earnings for you. This right here, net sales increased 15%.
Okay.
Yeah. So it was, arguably not a great, quarter for Amazon as well. If you look at this, decrease in cash flow, they had to invest more. They were, less profitable. Amazon also, missed earnings, quote unquote, for the most recent kind of fiscal quarter.
Right. Okay.
I just want to give that comparison in terms of the speed at which Alibaba is growing compared to, the American equivalent, if you will.
Right.
So they broke it down by segment. We kind of briefly touched on this a little bit, but you are looking at this China commerce retail 33% year over year growth. That does include the acquisition of this company called SunArt, which is a supermarket chain. But I don't see a reason to break that out personally from the entirety of the Chinese commerce growth. They did also have kind of growth across the board here, which is respectable. I was definitely impressed with their level of growth. These numbers right here, this might as well be like a Kathy Wood stock, right?
Right. Yeah. Pretty much.
Yeah. Total revenue 29%. All right.
Okay.
Now, this is Alibaba Cloud. For those of you not aware, like Cloud computing for them has been kind of a area of loss. This is actually the first quarter in which it's swung into a positive EBITDA, which I think is commendable. That they finally are going to be generating cash flow from this entity of Alibaba Cloud, 33% year-over-year growth.
Okay.
Respectable.
Yeah, it's pretty wild.
Alibaba Cloud is growing slower than AWS, Amazon's cloud. Amazon Cloud is like 44% year-over-year.
Okay.
Yeah, but still solid growth. This is really where people kind of lost it a little bit on Alibaba right here. This expectation of revenue growth of 20 to 23% year over year. Previously, people have been looking for about 30%, which is what they did, previously for that 29%, right?
Yeah.
Even my personal most recent valuation, I had used a 30% growth rate for the next 5 years.
You did. I remember that. Yeah.
Achievable for them. They're saying now not so much. Now, why that is the question. They are certainly losing some market share. JD surpassed earnings.
I was waiting for you to say that because JD's stock is killing it.
Yeah.
And I was half Baba, half JD. I was like, I'm just going to go all Baba.
Yeah.
Damn.
Yep. Yeah, I hear you. So they're definitely losing some market share. That is true. But I will show you. I believe I included in here that their market share is still more dominant in the Chinese e-commerce than Amazon is in the United States.
Right, which is crazy.
Yeah. Just to give you an idea, like I said, increased competition. And I'm going to do some valuations here with these new numbers. So if I were to go even more conservative than they are right now, right? They said, 23%. I said if they grow 15% for the next 5 years, right? And then 3% perpetual growth thereafter, which is a global kind of increase in terms of the economy. China has been around 5%, so it'd be underperforming the Chinese economy as a whole.
Yeah,
you're still looking at it basically being priced for a fair market valuation at $146 a share. And this is not a great scenario for them. They would be growing slower than what they predicted. They would be ultimately their terminal multiple there is determined by the actual growth in terms of the worldwide economy rather than just China alone. And the $7 a share earnings per share includes the most recent quarter where they had a significantly higher kind of reinvestment into their business. So,
right.
Definitely a major step back. So this to me kind of paints like a worst case scenario for a market rate of return at about 146, which is approximately where we are.
Yeah, we're at like 142.
Yeah, exactly. So this is not my prediction. This is just saying like this is like a bear case in my kind of thought process. Now, if they were to do this 20% that they're saying, the kind of low end of their range for 5 years, and then ultimately 3% thereafter, still below in terms of what I think they can do for a perpetual growth rate. Market rate of return 11%, which is a little bit above average, but you're still looking at about $180 per share price target. So that would be the fair value. I think this is closer to a low mid growth presumption for Alibaba stock going forward.
What's the incredible high bull case?
I didn't make a bull case, actually. I did not make a bull case because to me, value investing is about kind of worst case scenarios and mitigating your downside.
So it's $1,000 a share. Is that what it is?
I mean, we're going to be somewhere in that ballpark, I think, in 10 years, put it that way.
If Rivian is at $130 billion market cap, I feel like Baba could be 10 trillion. So
yeah, why not, right? And then, I wanted to highlight this too. What is one of the things we hear all the time from Alibaba bears and like, oh, you don't own anything. It's just a piece of paper that has no actual ownership in Alibaba, the company. This right here, this is their share repurchases, right? This to me is cash flow going back to equity holders, and that is what the owning a share of a company represents.
Right.
Is that ability to get a claim on some cash flow. So
right,
this to me completely discredits the argument that at this point in time, you are entitled to a share of the cash flow.
Right.
So like, I don't know. I just want to make that point. you know, they talk about how this like share of spending diving off in China and that sort of stuff is part of like the kind of scenario here of why like Alibaba is doing so poorly. Like, oh my God, like the Chinese economy is not going to be growing at this ridiculous rate. And JD, like we talked about, JD growing, but if you notice here, look at this: revenue climbs 25.5%. Alibaba 29.5%. So
right, I do have a question for you.
shoot.
Well, a lot of the headlines I think people had a gut reaction to selling was earnings per share 38% year-on-year decline.
Yep, very true. A lot of that was due to reinvestment in other aspects of the business. With same thing. If I actually go back to that slide about Amazon, same thing with Amazon. Their profitability was down. The cash flow was down. They were reinvesting in areas of business. They highlighted a couple of areas in which they saw continued growth, and because like I said, JD is definitely nipping at their heels and being very competitive, which is great. But they were doubling down on Taobao deals, and they were doubling down on Lazada, which is like a Southeast Asian kind of e-commerce site that they own, and that had, I want to say it was like 80% year-over-year growth. Some of their smaller units that were just growing at a tremendous clip that they were reinvesting within.
Yeah, so that was why the headline was so funny, because revenue was 29% year-over-year rise, and earnings per share was 38% decline. So it's like
exactly
that's kind of weird.
Yeah.
People just saw the decline.
Exactly. It is definitely funny. People talk about like paying for growth and that sort of stuff. If this was like a Kathy Woods like hyper growth story stock, people are like, oh man, it's great. They're investing. It's awesome. I love that they're investing.
Yeah. Everyone else was mad at this company investing.
Yeah,
Exactly. Kind of crazy.
It's actually like I should have looked it up. Now that you make me think of that, I wonder what Alibaba's like return on invested capital is. Classically, I remember it being good, but I don't remember what the actual number was. To show you how efficiently they allocate capital.
I'll try to find it.
Yeah. So this is kind of what I was talking about as far as like their market share too. They make this sound like JD is going to kind of take over and everything like that. But you're looking at still Alibaba retaining about a 47% market share of e-commerce in China. Right? And in comparison to that, this right here is the United States. So Amazon has a 41% e-commerce market share. So Alibaba is still more dominant amongst Chinese e-commerce kind of companies compared to Amazon in the United States. Granted, it's a more immature market. They're kind of eroding their lead a little bit here. Nowhere near as profound here as Walmart trailing by like 35% compared to Alibaba, but still, to Amazon, sorry, but still very respectable. Did you find that number?
I'm actually surprised Target isn't higher. It's Alibaba's cash return on invested capital, or CROIC, for fiscal year ending March 17 to 2021 was 18.6%.
Yeah.
The last 12 months was 13.1.
Okay. Still, those are market-beating numbers. Over time, a stock's return tends to kind of follow what the return on invested capital is, because these are companies, basically when you generate cash flow, you're able to do 5 different things with it, right? You're able to reinvest in yourself. You're able to buy back dividends. You're able to pay down debt. You're able to buy back shares or make acquisitions. So those are the way companies use their cash flow. And if they're getting return on invested capital that's mid-teens or something like that, over time the stock should mirror that. That's the idea.
Yeah. It also says as of June 2021 was 8.33% for the whole quarter.
Okay. So. Now, this other thing about the slowing down of the Chinese economy, this is from like Statista, looking at the actual GDP growth in the Chinese economy. It's slowing down, generally over time. So, since 2010, down from 10% down to 5%. But any idea what the U.S. GDP runs around?
I'm going to say it's worse than this.
Yeah, it is. Yeah, you're talking about 2% for the most recent quarter.
Okay.
Because as companies grow, economies grow, it's harder to continue that growth rate at that high trajectory. Slowing, but still higher. Right. I really kind of dislike the headline game to a certain degree. So it wasn't included in this quarter, but you've heard of Alibaba Singles Day.
Yes.
Really, it's 11 days, but it's like a kind of major sales festival for them.
Did know that. Didn't know it was 11 days.
Yeah, it is 11 days. Now, one of the interesting things about that is like the headlines around that this year were, it grew at the slowest rate ever. But like, what does that still mean?
I mean, if you're growing at an astronomical rate, and then you have like, if you grow at 100% one year and then like 98% the other year, it counts as a slower rate. It counts as slowing down. It's still gross. Like it's still really good.
They grew at 10% year over year, like 9.9%, something like that.
That's pretty solid.
Yeah, it's pretty solid growth. Yeah.
Yeah.
I mean, if this channel grows 10% per year, I'd be a pretty happy guy.
Yeah, I'd be pretty happy with that too. we had to finish our first year.
Yeah, I know, exactly, right? But it irritates me like how people will take the same fact and twist it into like multiple kind of storylines that don't really fully represent the facts. Now, was this a terrific earnings from them? No. Like I'm a little, cautious about where they reinvested this capital and whether or not they're truly going to get back that like a good rate of return on it. But is this enough to motivate me to sell my shares? No, I'm going to continue to watch them for a couple more quarters. My time investment horizon was always 5-10 years, something like that with the stock. Now, if I see continued kind of underperformance and that they cannot continue to grow, and they're having to constantly adjust their revenue growth like numbers down, then you might have to reevaluate it. But one quarter does not change my investment thesis. Basically,
one quarter isn't a trend. 3 is a trend.
Sure. Yeah. That's exactly what I was thinking. If we could see several quarters in a row where they're continuing to decrease their revenue targets, then it's like, maybe I should at least decrease my position at that point. But right now, I'm not doing anything. I'm not really sure I'm going to buy the dip. Like I said, I have about 10% or so of total invested assets within Alibaba. It was definitely a little red week. I also made a what do you call it, iron condor in my account against them, which I took a max loss on, which was less than ideal.
My whole account's max loss. Don't worry about it.
Yeah. All right, guys. Well, let us know what you think. Are you going to buy, sell, or hold here?
Yeah, I'm buying more, but let me know what happens in the comments.
All right. See you guys.